Good afternoon and welcome to the REGENIX Group PLC final results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated in the right-hand corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. And I'd now like to hand you over to CEO Daniel Lee. Good afternoon to you, sir. Hi, Daniel. The floor is yours.
Go ahead, please, Daniel. The meeting is now live.
Terrific. Thank you very much. Thank you, everyone, for giving us some time to update you on the 2022 results that we just released. David and I will spend the next 30 minutes discussing the company, the activities, our results, and some of our plans moving forward. We'll have time for questions at the end of the presentation. This is a disclaimer slide, which I encourage everyone who's on this call to review. Just as a review in terms of introducing the presenters today, I'm Daniel Lee. I was appointed the Chief Executive Officer of REGENIX in November of 2020. I had originally joined the organization in January of 2019 as the president of the U.S. operations. Personally, I've had over 30 plus years of experience in technical as well as commercial roles in medical devices as well as biologics. My roles range from R&D, marketing into, of course, management. These were in startups as well as well-established companies. One of the reasons that I came to REGENIX is REGENIX has the global opportunity to provide tissue-based grafts from allograft as well as xenograft tissue. And not many companies have the technology platforms to allow the company to have both. So with that, I'd like to introduce David Koch, our Chief Financial Officer.
Hey, thank you, Danny. Obviously, my name is David Koch. I'm the Chief Financial Officer. I joined the group in January of 2021. By way of background, I have 30 years of experience in the medical device space. I started, ran, and ultimately sold a contract manufacturing company. And along the way, I had the chance to work with Danny for several years as Chief Financial Officer at Aperion Biologics. So we have a long working history together. I started my career on Wall Street, first in investment banking at Salomon Brothers, and then in corporate finance at GE Capital. And as I was considering making the jump to join REGENIX, one of the things that really drew me to the company was the strength of the customer relationships that REGENIX has. We talk about Arthrex, which is the largest sports medicine company, a multi-billion-dollar enterprise. Arthrex is a strategic partner of ours, and they could choose to work with any tissue processor they so desired. And it's really the strength of our platforms that brought them to us and keeps them with us. And so it's compelling that the value proposition of our platforms really creates worth for companies like Arthrex.
Great. Thank you, David. So a little bit of an overview of the company. So REGENIX, we are a global healthcare organization focused on the area of regenerative medicine. Regenerative medicine is a specific discipline that seeks to regrow, replace, repair cells, organs, and tissue. and most of the regenerative medicine therapies rely on the body's innate ability to heal itself. Now, Tissue Regenics has developed a number of tissue-based scaffolds products utilizing two core technology platforms, BioRinse as well as D-Cell. But both of those technology platforms share the same basic objective of preserving the inherent biologic, biomechanical, as well as biochemical properties of the tissue through a gentle processing methodologies, which in the end provide a safe as well as sterile tissue product. We have manufacturing facilities in the United States, in San Antonio, Texas, in the UK, just outside of Leeds, and in Germany, we have a joint venture that focuses on the production of corneal grafts. The tissue platforms in which we use are quite diverse. We have musculoskeletal tissue, so bone, tendon. We also use dermis tissue to produce products, as well as birth tissue. So numerous tissue platforms, which allow us to have products in diverse surgical marketplaces, whether that's orthopedics, spine, sports medicine, foot and ankle, dentistry, ophthalmology, urogynecology. So numerous marketplaces in which our tissue products are currently utilized. So the company, we believe, is certainly well positioned to be a contributor in helping to transform healthcare through regenerative medicine. So some of the highlights for 2022, the company, we continue to focus on executing our 4S strategy. 4S strategy is composed of supply, sales revenue, sustainability, and scale. And we'll talk about that more throughout the presentation. But it has been the clear direction of travel for the group, and it's very important that we execute on our plan. So as a result, in 2022, the group delivered 24% growth year over year. And the other certainly highlight, and which is a milestone event for the organization, that we achieved a positive adjusted EBITDA in the fourth quarter of 2022. Operationally, some of the other highlights for the organization, our first S is supply. And in 2021, we discussed how we had finished our phase one, the completion of our phase one expansion, which gave us additional capacity. Now, so one of the things that we also need to do, make sure with the additional capacity, the additional ability to store the tissue, because none of what we can do in terms of driving sales revenue, it all requires adequate supplies of tissue. So 2022, we made sure that we developed a adequate reserve supply of tissue. So this way, with donor supply and the additional processing capacity, we can obviously drive revenue. We continue to add new products to our portfolio to address voids in the marketplace. But also, just as important, is with our additional capacity and our additional ability to produce products, we are looking at other opportunities, other markets into which to enter into with our tissue-based products. Some of these are additional surgical marketplaces, but also we're talking about additional commercial markets outside the United States. And we'll talk about that a little bit more in one of the upcoming slides. We also began the first full year of commercial distribution of our OrthoPure XT. This is the only non-human biologic graft which is CE mark for certain ligament reconstruction procedures. We began distribution in Italy and Germany, and so far we're quite pleased with the traction in those markets. We will talk a little bit more in detail about the increased efficiencies We moved into our new facility in 2021 and 22. We realized that with developing efficiencies and how we process, the protocols we use, how we schedule things, we saw that we had additional revenue potential from this facility expansion, which gave us an additional $10 million of revenue potential, which pushed out the immediate need for our phase 2 until 2025. The commercial traction across our portfolio was certainly recognized by the performance of each of our divisions. When you look at BioRinse, our year-over-year business grew 26% and represented about $16 million of revenue for the organization. Our D-Cell business grew 25%, and we'll certainly discuss in a couple of more slides as to how did that happen. And the D-Cell business represents about $5.3 million of our revenue. And then our joint venture grew 12%, 24% at constant currency. And so obviously we're quite pleased with that, as they were able to increase the amount of supply of tissue to drive their growth. So today, what you'll learn is obviously our revenue growth, our continued look at efficiencies, and the achievement of fourth quarter profitability are all positive directions for the organization. When we look at a little bit about the market research about the markets, there's numerous market research reports that talk about the growth and the importance of regenerative medicine over the coming decades. Now, when we look at the specific markets in which we participate, I'm just going to focus on two: the global bone graft substitute market as well as the soft tissue market. Now, bone graft substitutes globally, the market research indicates 6.1% combined annual growth rate, and it's expected to be a $5.7 billion market by 2028. Now, we participate in a subsegment of bone graft substitutes, specifically demineralized bone matrix, as well as some allograft. The demineralized bone matrix marketplace by itself represents a $500 million market just in the United States alone. So our growth in the 26% range is certainly growing at above the current market growth. So we are taking market share. And obviously something similar with the soft tissue market, where our DermaPure product is used in surgical indications to reinforce soft tissue, as well as wound management. That business grew 25% in 2022, and market research shows that marketplace growing at about 5% annually. So we're quite pleased with the growth of our business relative to the general market. A little bit, a couple of minutes on our platform technologies, BioRinse and D-Cell. BioRinse is used predominantly on our bone as well as birth tissue products. The leading bone product, a demineralized bone matrix product, is a product called Concentrate. It's distinguished in the marketplace. Really three things. Surgeons love the way it handles when they're using it at the time of surgery, but just as important is that it is a product that's made from 100% bone. Some other competitive products are combined with some type of a carrier, and that may dilute the effectiveness of the demineralized bone matrix that's contained within that product. And then the other aspect that clinicians enjoy and certainly is an indicator of the superior performance of the product is that we test every single batch of demineralized bone matrix for osteoinductivity. So osteoinductivity, that is a test to show that the product can form and help initiate bone formation. And we do that in a recognized industry accepted test model, and it's used on every single donor, every single batch of tissue in which we process. It is expensive, it is time consuming, but that's what attracts companies like Arthrex to having this product as part of their portfolio. 2 weeks ago, I was attending the American Academy of Orthopedic Surgeon meeting, and the private label branded version of the concentrate product was figured prominently in the biologics section of Arthrex's booth. So AmnioWorks is a birth tissue product, is an amniotic membrane product. Surgeons like the way it handles the aesthetics of the product. It's a product that's used in dry eye, as well as whenever there's a corneal abrasion where you're trying to help protect the cornea, give it the opportunity to heal. So it's used in ophthalmology. Amniotic membrane is also used in external wound care. And then products utilizing our D-cell technology. These are mainly soft tissue products. On the human tissue side, the flagship product utilizing D-cell is our DermaPure product, which is a human dermis product. The D-cell technology, which was developed at the University of Leeds, is known to is characterized by its ability to remove 99% of the DNA. And why is that important? It provides a very clean scaffold, so this way it can readily be accepted by the body and then incorporate. The product is used internally in surgical indications such as Achilles tendon repair, where you need to have a soft tissue augmentation, and it's also used in urogynecology when there is some soft tissue reinforcement or replacement that is needed. So with the BioRinse, as we already have communicated, we were quite pleased with its 26% year-over-year growth. It's mainly driven by the market demand for our demineralized bone matrix, as well as our amniotic membrane products. These are products, again, that are used in numerous surgical specialties. With the return of elective surgeries, and there's still opportunities for elective surgeries to come back to normal. They're not 100% back yet. Our partners, with the superior performance of our product, they are taking market share. They are growing their business. So if they're growing their business, we're growing our business. And so obviously, again, companies like Arthrex are again, they partner with us because of this product. So then the efficiencies that we've developed in our processing facility, as well as our enhanced supply of donor tissue, what that provides, in addition to, of course, margin improvements, but it also allows us to be much more responsive to changes in the marketplace. If market demands require an increase in volume of product from us, before it used to take us a much longer amount of time, and now we're able to cut some of those market spikes. We're able to cut our response time in half to what we were able to deliver before. On the D-cell side, we saw a 25% growth in 2022, and we talked about that one of our focuses for our D-cell business, which is, again, the DermaPure product, was a restructuring of our commercial organization. We wanted to move the decision-making of our commercial team closer. We pushed it down to the regional manager level, who were closer to the customer. One of the things that we had seen that was part of the problem was about execution. We have a terrific product, but there just weren't enough people who knew about this product. But between 2019 and 2021, we previously reported how we added only 16 new distributors. In 2022, we asked all of our regional sales managers to add on at least 32 new distributors. Well, the result was we added 41 new distributors in 2022. We expect this momentum to continue into 2023 as we expand this program into other markets. But again, that was all parts of the reason why this business was able to grow 25% and return to the sales revenue levels that we enjoyed in 2019. In 2020, we'd seen a drop, and then we were relatively flat for this business. So it was very important to David and myself, as well as the rest of the team, to bring this business, restore this growth trajectory that we are enjoying with our other businesses. D-Cell is also used in the OrthoPure XT. Again, this is the xenograft, the only xenograft tendon non-human biologic option for ligament reconstruction procedures. Again, we began commercial distribution in Italy and Germany, and we have ongoing discussions with other distributors within the EU or whatever markets accept the CE mark as the CE mark approval. The global demand for a product, an off-the-shelf product like the OrthoPure XT, is evidenced by we signed a distribution agreement with China. Even though China has its own regulatory approval pathway, we have a distributor who's going to share in the cost and the time associated with getting this product approved in the Chinese market. With respect to new products, we introduced the V-New Fascia Lata in late 2022, and subsequently we have fulfilled reorders. This product utilized a piece of tissue which in recent time we had not utilized. So one of the things as a human allograft tissue processor who is honoring the gift of human tissue donation, honoring a family's wishes that their loved one, their organs or tissue can help as many people as possible. So if we're able to utilize as much of the tissue as we can, we are fulfilling that mission. So Fascia Lata was a tissue that we had not historically processed, but we were able to take that tissue, create a unique configuration for the stress for use in urogynecology and stress urinary incontinence procedures that affect up to 35% of women. We have other products awaiting in the wings that were requested by our strategic partners, but the launch timing was actually delayed as they await the demand for products to come back to normal. But we do expect to introduce both these products in early 2023. The other thing that I just really want to talk about is, we continue to look at not only new products, but also new markets. So not only other surgical indications which can benefit from regenerative biologic products such as tissue, but also in markets outside the United States, which do not have readily available access to allograft. We spent time and effort in 2022 to establish a logistics partner for tissue, as well as get the regulatory approval that is necessary to distribute allograft tissue into the European market. Obviously, we also have our xenograft tissue product, and we'll continue to look at market opportunities outside the United States for the OrthoPure XT. Our 4 S's, again, this is the pillars of the strategy of which we introduced 2 years ago, and it continues to be the the marching orders for our organization. So on the supply, we've talked about how we've augmented our tissue supply. We've focused on processing efficiencies. Now, with the additional supply, we can drive sales revenue. We will continue to drive double-digit growth objectives across our respective businesses. And as I mentioned, with the efficiencies we've developed, we're able to be much more responsive to any market demands, bringing on new customers, et cetera. And we will, again, continue to build on that momentum from 2022 into 2023. Sustainability. We recognize a positive adjusted EBITDA in the fourth quarter, which was, again, a pivotal moment for our organization. And our phase 2 expansion, which we've discussed previously, there is our existing cash position. There are no plans for the need for any additional capital raise to fulfill our current business plans. Scale, expanding from our existing commercial markets into other markets domestically as well as outside, within the United States or outside the United States, with our allograft and xenograft products are part of our plan. And again, it's part of our plan to be a global provider of tissue-based products. I've talked to you about the processing efficiencies and how we now have extended the revenue potential by an additional $10 million, so up to $40 million of revenue potential from our phase 1 expansion. So how did we do that? We added 2 new processing clean rooms to our existing facility. Now, that added about 30% more footprint in terms of processing space. But what we have been able to do with efficiencies in terms of scheduling and efficiencies of processing protocols, we were able to increase our processing of all the various tissues in which we process: dermis, amniotic tissue, musculoskeletal tissue. We're able to increase our processing volume by 62%. So at this point, I'm going to turn the meeting over to David to communicate some more detailed discussion around our financial performance.
Hey, thank you, Danny. Starting at the top, we'll review the P&L, the income statement, and Danny's already went into some detail into the growth that we saw across the group. We're very pleased to see all segments of the portfolio up 20% in constant currency in the last year. BioRinse has been a strong grower for us for the last couple of years, but the reorganization at D-Cell is paying dividends, and the GBMV joint venture, very nice work by that group out of Rostock, Germany. Traveling down, our gross margin, Danny mentioned, did increase 300 basis points from 43% to 36%. A couple of drivers for that. In early 2022, we put through a price increase in the BioRinse segment. And then, just the ongoing process efficiencies in the expansion that we did in our processing activities, helped our gross margins. And, it's really good. I'm heartened to see our gross margins increase in this environment where we do face supply chain pressures across the board. And with those efficiencies really allowed us to overcome that and then some. So very pleased with that. We always look at our admin expenses and manage to a budget and keep a close eye on the expenses. And with a 24% rise in revenue, only 6% up in admin expenses, they're dropping from 63 to 54%. And I think we'll continue headed south. Just for context there, I looked at our accounts in 2019. In 2019, the company was earlier in its development. Admin expenses were 101% of sales revenue. So we pretty much cut that in half in 2022. net of that brought us to adjusted EBITDA profitability. And just a quick sidebar on adjusted EBITDA and what is the adjustment. And EBITDA is earnings before interest, taxes, depreciation, and amortization. And the adjustment is to add in the share-based payment, which is a non-cash charge to the income statement. So when you add that back to EBITDA, it becomes adjusted EBITDA. So that's what that adjustment factor means. So next slide. Looking through the balance sheet, again, the cash position of 5.9 million meets the need of our current business plan. Going down the balance sheet, we talk a lot about supply, and supply is critical to the second S, sales revenue, but it's a kind of a double-edged sword in terms of you've got to have the supply in order to make the sale, but too much supply consumes a large amount of cash. So we manage our inventory levels closely to ensure that it's a fine line. We've got to fill the orders, and we'll probably continue to, for our business, going on back order is really negative. So we will carry a higher level of inventory, but we do manage that. And we showed here in 2022, sales revenue was up 24%, inventory levels up only 12%, and our inventory turnover increased 18% from last year. So north of 1, and we want to see that continuing to grow. Collections were also improved slightly. Post-period end in January, we extended and increased the size of our revolving credit facility with our lender MidCap. We pushed the maturity to January of 2028, and we increased the revolving credit facility from 5 million to 10 million. It's currently at 5 million. We have the option to accordion it up to 10 million when we need it. Again, that wasn't required by the business plan, but it just seemed nice to have that flexibility. Finally, the MidCap financing has a revenue covenant associated with it that we test on a monthly basis, and we meet that covenant with ease, just very comfortably. And finally, on the balance sheet, we've had several questions that we had no deposits with Silicon Valley Bank, and neither does MidCap, so we're comfortable with our liquidity position. Oh, next slide. This year, another slide for me. I usually only get the P&L and balance sheet. In conjunction with our annual general meeting, our board consulted with our largest shareholders, our banking advisors, and our legal counsel, and is putting forth a recommendation for 100-to-1 share consolidation. Just a little history of this event. I started with the group on January 21st, 2021, and I think for me, the first time this came up was January 22nd, 2021. When are you guys going to consolidate your shares? It wasn't the right time for the business then. Danny and I had a lot of renovation and fixing up of the base operations of the business. We put in place the 4 S's and started to execute on those 4 S's. We've had 4 sets of results where we've met market expectations. The company is back on a consistent pattern and trajectory of growth across all the different businesses, culminating in a first for the group in the fourth quarter of this year, hitting adjusted EBITDA profitability. So the company is in a much better position. When you put that in conjunction with the new brokers, FinCap, that we're working with, and their more consistent broking effort, we feel like it's the right time to consolidate the shares. A sub-penny share price closes the door for many investors that can't even consider looking at investing in Tissue Regenix. And so we feel like having a larger number in the share price will help our perception in the marketplace, and help the broking effort. And finish.
Thank you, David. So in summary, Tissue Regenics, we've made significant progress on our 4S strategy. We look focused on supply, our processing capacity, looking at operation, continue to add to our product portfolio. All of this will help drive revenue growth. The efficiencies that we implemented after our phase 1 expansion alleviated any near-term capacity concerns. Our BioRinse products are still in demand, and as elective surgeries can return to normal, we expect to continue to capture more market share, as well as grow with the resumption of elective surgeries. On the D-cell, our commercial restructuring has been successful in the geographies in which we implemented that program. We have opportunities to drive additional growth as we expand that program into other parts of the United States. Right now, D-cell with the commercial team, we cover about 30 to 40% of the United States. So we have certainly more opportunities on D-cell. And then also, as I mentioned, we are expanding the products, not only expanding our products with product line additions, but also expanding the markets in which our products will become available. So the revenue growth for our organization, market research has indicated that we'll be in the 20% range, demonstrating adjusted EBITDA profitability in the fourth quarter is also positive, and market research also indicates that we plan to be a profitable company in 2023. So all of these are certainly positive trends for Tissue Regenics' continued growth and our opportunities to drive shareholder value. So at this point, we'll
like we've got now, and then Richard will have just a laptop in front of him and the link on which you'll have the presentation.
Very much indeed for. Sorry, Daniel. Thank you very much indeed for updating investors. Perhaps if I may ask you to open up the Q&A tab that's just on the right-hand corner of your screen. And if you'd be so kind as just to read out the questions and give any responses where it's appropriate to do so. And Daniel, I will pick up from you at the end. So just that Q&A tab on the right-hand side of the screen. I'd ask you just to open up that tab and read out those questions.
Okay. I think, should I turn on my camera?
We can turn on the camera. I'm just worried about your connectivity. So let's bring it. I'll, if I may, just keep them off just for the time being. Yeah, thank you, sir.
Thank you, Mark.
So we've got about 18 minutes and about 18 questions. So we'll be brief, but hopefully concise. So as a company relies heavily on human tissue donations to manufacture its core products, what measures are in place to mitigate any potential supply disruptions?
A great question, and thank you. With being a human allograft processor, it is a very unique supply chain. We don't have the opportunity to use Amazon Prime to source materials. Maybe some of our PPE, but not the human tissue products, the human tissue that we utilize to process into products. Now we have a couple of things that we do. As I mentioned already in this presentation, is we built an expanded storage facility for allograft tissue, and we spent 2022 building up a reserve supply of tissue in case of any spikes in demand, as well as any issues that may affect the supply of tissues coming into our facility. Now, one of the things we learned during COVID was in many parts of the United States, when COVID affected certain regions of the United States, it also shut down hospitals. So the hospitals only stayed open to treat COVID patients, and any secondary or kind of elective activities in those hospitals were cut off. Recovering tissue from organs and tissue from those hospitals was essentially then cut off. So what we have done is make sure that we have recovery agencies around the United States in various geographic locations, as well as some recovery sources from outside the United States in North America. So we also have a dedicated team. We have a department that focuses on donor services, and so with those three levels, we're able to make sure that we have adequate supply.
Okay, great. Pre-submitted question number 2. Following the launch of a white label product with a top 10 global healthcare company in 2020, can you update us on how the product received and any revenue figures? Also, can we expect similar deals to be announced in the future?
Regarding the product that was introduced in 2020, and unfortunately we cannot disclose who that is, that product was introduced during COVID. It is an elective surgery product, so some of the expectations in terms of the sales were tempered, just like anything within elective, anything that was utilized in elective surgeries. But the market demand for that product continues to be strong. Clinically, the feedback from the surgeons is still, so positive, and so we're very pleased, and so is our strategic partner. Can we expect similar deals to be announced in the future? That is certainly part of our business plans to continue to develop products with strategic partners.
Great. Pre-submitted question 3. Strained by its ability to recruit skilled employees. Your website has listed the same 5 vacancies for some time. You seem to be unable to fill them. A particular concern is that you have been unable to recruit a senior director of business development, who presumably will make an important contribution to sales growth.
So, we're not immune to some of the challenges facing all companies within the U.S. I mean, most of what's described here in this question is the vacancies in our San Antonio facility. And so it has been somewhat difficult. It takes a longer period of time to bring on people. For us, it's all, we're a very, still a small organization. We're laser focused on finding the right people. We're not just going to hire somebody. We want to bring in people who not only certainly potentially have the right skill sets, but really have the right motivation, who are right fit for the organization. So in some ways we are selective, but it has been somewhat challenging to bring on people in the amount of time. It is taking longer to bring in people. Now, with respect to the commercial roles, that I guess what was a little bit the reason that maybe so long was we were actually hiring 2 people for those roles, and I can happily say that we have filled both of those positions at this point in time. So that's maybe why that position was on the website a little longer.
Okay. Pre-submitted number 4.
Do you want me to read it?
No, I'll read it. In the going, because I like to talk, I never get to talk. You get to talk. In the going concern section of your results, you say that the cash flow projections show that the group will continue to consume cash over the forecast period to 31 December 2024. Question 1, how does cash consumption change over that period? Question 2, when do your projections show the group generating cash? And question 3, how do the phase 2 costs fit in here? First, real quickly, thank you, whoever submitted this question. It's a great question, and pleased to see people actually read the auditor's opinion in the going concern note that we put together, because we spend a lot of time on that, and sometimes I feel like nobody ever reads it, so I'm glad somebody read it. For a response, I really want to direct all of the investors on the call. Our new broker, FinCap, they make available at no charge their research covering tissue REGENIX. For the group, we can't make forward-looking statements, but they put together a very, very detailed, about 6 weeks ago, initiation report on the company, and then a very detailed update note in conjunction with these annual results. So I think if you refer to that initiation note, there's a series that the broker has produced that goes into the cash flow forecasting for the business. Another pre-submitted question: how much cash will the share consolidation cost the company? We took special to do that share consolidation as part of the annual general meeting. All of the communication with shareholders, it gets to kind of tag along. So the cash costs, the incremental cash costs of that activity, I'm not going to say are de minimis, but they're on the order of 10,000 to 15,000 pounds sterling. So not significant. Another pre-submitted question: you refer to a one-off provision, circa US $447,000, related to a supply contract termination for D-Cell. Question 1, what happened? And question 2, what is the risk that the provision does not fully capture your liability? What happened? We had a supplier who supplied us with product that didn't meet our specifications, so that contract was terminated. What's the risk of the provision that we have further liability? Well, we know the assets that we purchased from this supplier. They're specifically identified and they've been fully reserved for. So I don't think there's little to no risk that their provision doesn't fully capture that liability. Pre-submitted: great turnaround at TRX. Many congratulations and thank you for your hard work and business acumen. What are your best guesstimate projections for this coming financial year, both turnover and profitability? And again, I would encourage everyone on the webinar to go to FinCap and download those reports. Again, available at no charge, and very detailed, comprehensive reports that talk about all of those kind of financial projections. Here's one for you, Danny. What are the next key milestones we should look out for over the next 12 months?
Well, besides the normal ones of meeting obviously in the next 6 months, discussing our revenue performance, our financial performance, some of the things you will see is we will continue to look at and make announcements about new products, new distribution agreements, the approval of our third-party logistics partner to distribute tissue into the European Union. So I think those are just all things that really are adding to our growth plans for the organization.
One here from Anthony.
Go ahead.
What's the timeline on Chinese regulatory approval for OrthoPure XT?
Yeah, great question. Right now, we're in the process of getting approval to start the clinical study that is needed. Overall, we believe that this will be potentially up to a 3-year process of getting the approval to start the study, starting the study. Luckily, the study does not require a large number of patients, and then the Chinese regulatory approval. That's why we've kind of said end of 25, potentially 26, before we see generating revenue. Now, with this distributor in China, one of the requirements is, post a regulatory approval, they are committed as having exclusivity for China, which we believe to be a marketplace that has about 200,000 ACL reconstruction procedures. Obviously, there are performance requirements by this distributor once they come online.
Mark W. had 3 questions related to the financials. I'll read them quickly in the interest of time. How hard is it to make a 5-year revenue forecast for the business? What are the main sensitivities? When do you anticipate making a post-tax profit? And how will you fund the phase 2 expansion? Mark, for the first 2, I would refer you to the FinCap report. The initiation report would have a good basis for looking at those, responding to those. On the phase 2 expansion, we have said that we can fund that without need for external capital. We plan to fund that with the cash that we have on the balance sheet, as well as the cash provided by the growth in the business over the time period we need to make that phase 2 expansion.
Was there another question? I don't know where it was. I can't see it anymore. Okay, well, we apologize. We don't know what the other question was. Okay, go ahead.
Looks like this may be can you comment on your extensive annual finance charges? Is there an opportunity to reduce these? When we look at our balance sheet and how we finance our balance sheet and the sources of debt and equity capital, we believe that having a certain prudent amount of debt in our balance sheet brings down our weighted average cost of capital, and that's in the best interest of shareholders. Of course, the cost of debt shows up on your income statement directly, so people can see it. Equity, which is kind of a hidden cost, but we do believe that debt will be, we've got a good asset and we've got good collateral to support that debt, and so we do anticipate, we do plan to maintain debt as a key component of our capital structure moving forward. To reduce those, we would have to sell shares in the company, and that would dilute all the other shareholders. So that's probably not in anyone's interest, as long as the business has assets to support that debt.
David, Daniel, it might be a perfect time for me to jump on in, and of course any of the questions, I know you said that one might have been missing, we'll provide you all the questions that have been submitted today by investors, and if there's any additional responses we can add them and then publish them back to those on today's call. Daniel, David, I know investor feedback as usual is going to be important to you, and I'll shortly redirect everybody on the call to give you their thoughts and expectations, but I wonder, before doing so, Daniel, if I may just come back to you for a few closing comments, and then, as I say, I'll ask investors to give you their feedback.
Thank you, Mark. Yeah, so Tissue REGENIX, we're very pleased in what we were able to deliver in 2022, and we expect that to continue into 2023. How are we going to do that? We're going to continue to rely on our 4S strategy, and in particular focus on sales revenue, sustainability, and scale. All of our business units are growing in the right direction, and the anticipation for the next 12 months, well, through 2023, is continuing on a revenue growth projections in the 20% range, and then again, profitability, demonstrating profitability for the 2023 adjusted EBITDA profitability in 2023. So all good measures of our continued focus on the growth of the company.
That's great. Daniel, David, thank you once again for updating investors this afternoon. If I could please ask investors not to close this session, as we'll now automatically redirect you for the opportunity to provide your feedback in order that the management team can really better understand your views and expectations. On behalf of the management team of REGENIX Group PLC, we'd like to thank you for attending today's presentation. That now concludes today's session, and may I wish you all a very pleasant afternoon.
Thank you.